Hi everyone, today we are going to discuss a new chapter for first PUC students, that is under accountancy. The chapter name is Introduction to Accounting. So this is the very first chapter in your under your first PUC accountancy, and you all are very new to the subject, so you have to just understand the basics like little bit in a little bit detail, then you can go further in a very good way. So as this chapter is completely theory, you have to understand each and every topics very clearly. So, and before that we have to just understand what is accountancy and why there is a need of accounting, all these things. So, and if I explain you in a very professional way also, it will be very difficult for you to understand. So, in a very brief way, in a just general language, I am going to explain why there is a need of accounting and why there is a subject called as accountancy, why you should opt this, okay. So, before getting into it, in a very simple terms, if I tell you, every business should maintain accounting, should have accounts under it or within it. So what happens here, let us take an example of a business. I'll start a business, and since the day one till the end of the year, I'll be having many transactions, I'll be facing many new events. Might be I'm purchasing a new machinery to my office for my business, or maybe I'm purchasing a new laptop today, maybe I'm paying a salary to my employee, maybe I'm paying electricity bill, or maybe I'm purchasing some raw materials for cash or some raw materials for credit. So once I purchase a raw material for credit, in the future upcoming date I have to pay money for them, or might be some customer from me might be purchase my goods for credit, and and that customer should pay me later, not on that particular day, he should pay me later. So all these things, I cannot keep all these numerical things or all these events at once in my mind since the day one till end. So I need some methodology to record it, I need some way to record it, each and every single thing, because once I record it, I need to go through it again. Once I recheck, I should understand it properly. So the recording should be in such a way, you have to just write down all these transactions in a very good manner. So this is actually called basically accounting. What all transactions are happening in your business, you just record it in a book. This is called accounting. As well as at the end of the year, you need to know, every businessman will be curious to know whether his business is running in a profit or it's not running in a proper way, whether might be it is gone in loss. He need to know, because he need to continue his business further, or he need to make some changes in his business. He need to know the financial position of his business at the end of the year. So what he should do now he should just take all these transactions, whatever he has done throughout the year. Might be he purchased something, might be he sold something, might be he got some profit from something, and he made some expenses throughout the year. So all these things he should just calculate, he should just deduct expenses from the incomes, or whatever he bought should be added and whatever he sold should be deducted. All these things he just put together and he just get a result, and that result makes the businessman easy to go further for his business. So that is why there is a need of accounting. It's just general, every business need accounting because of so and so reasons, okay. So how this process happens in the within the business, and what are the some general principles should be accepted when you do accounting. So this chart, this four concepts, for example, like first one is economic event, accounting process, communicating accounting information, decision makers. So you have to mainly remember these three things to understand the subject, okay. So what happens here, in a business an economic event should happen. An event should happen that should be economic. I'll just explain you what is economic event, and this economic event should lead to accounting process. So whenever the economic event happens, that event should go through accounting process, and once the accounting process is done, that accounting process gives a report, and that report should be communicated to users, okay. That the accounting information is communicated to the decision makers. So keeping this accounting information, the decision makers will take the decision, and this will again further lead to some more economic events. So this is the chart happens, okay. So remember this chart, and this is very important chart, and I'll just explain you this chart so that you can understand easily what this chart is about, okay. So economic event, what is economic event? So two conditions should be met if you want to tell that event as an economic event, okay. First condition is that the economic event, whatever event happens, right, that should be related to organization. Whatever event you do, or whatever event that happens which you wanted to enter into books of accounts, should be related to organization, and it should be in terms of money. Remember this, only the monetary transactions will only be considered into accounting. Other than monetary transactions, you cannot consider anything else in the accounting. Okay, so that transaction should be having a value of money. Okay, you should be able to evaluate that transaction in the value of money, or that transaction should include money in itself. Okay, so these two conditions should be fulfilled, then only that event is called as economic event. For example, I'll purchase a machinery for my business. Okay, when I purchase a machinery for my business, there are a number of events under that when I purchase it. For example, when I book a machinery for my business, and that machinery should be transported from the place of manufacturer till my place. Okay, and once it is manufactured, that installation also should happen. So let me take example. Once I purchase the machinery, that is also an economic event, because why? I am purchasing a machinery for my business, something related to organization, and I am paying money for that machinery. So that is in terms of money. And the transportation charges which takes place also is in the terms of money. So that is also an economic event. And once the machinery reaches my business or my factory or my unit, I need to install it, and I need some professionals to just come and install my machinery, and I have to pay them the installation charges also, or some service charges also. So that also an economic event, because that is related to my organization, and I am paying that in terms of money. So this is an best example to tell that is an economic event. So I understood. So once I start a business, economic event happens in my business, and this economic event should go through accounting process. So there are three things in this accounting process, that is identification, measurement, and recording. Okay, what is identification? What should you identify? The two things, the two conditions you should identify is, that is, this event should be related to organization, and it should be in the value of money. So this identification process should happen. Once you identify these two conditions are met, this is in the terms of money, and this is something related to organization, you just come to the next step, that is measurement. Now you should be able to evaluate, you should be able to calculate that event in terms of money. Okay, so again you will measure that event in the terms of money, and once you measure it, you will just record it in the books. So these three things happens under accounting process. What three things? Identification, measurement, and recording. Once an economic event is gone through this accounting process, it is made as a report. It is reported, and this report is used by many users, many internal and external users. Let us see what is this internal and external users in the next step. So this accounting information, whatever is there, whatever reports are there, will be communicated. It should be communicated in a right way, in such a way that this information should be a right information and should go to a right person at the right time. Okay, so this is the condition should be met when you are communicating the accounting information. Whatever information you have regarding the accounts in your business should be of right information. It should go to a right person at the right time. And reports depends on the business or depends on the users. Some users might ask it for daily, they want a daily report. Some users want it monthly, some users want it weekly, some users want it annually or half yearly or quarterly. So it depends on the business or it depends on the users. Okay. So once this accounting information is communicated, to whom it is communicated? It is communicated to the users, as I said. So these users are divided into two types, that is internal users and external users. Okay, internal users and external users. So these who are internal users and who are external users? Internal users are the users who are within our organization, within my business. The people who are within my business are called as internal users. The people who are not related to my business, but they are related somehow, but they are not a part of my organization, those users are called as external users. For example, let me take an example of internal users. A CEO, a chief executive officer, or the head of a business needs to know the accounting information to check whether everything is going on in a right way, whether his business is going on a right way or not, by which he can just make sure that using the accounting information. So CEO, the chief executive officer, or the head of a company is also called as internal users. And financial head. So you have a financial department in your company or under your business. So that financial department will be having a head, and even he needs the accounting information for his things, for his purpose, okay, for a right purpose. Then managers, there will be different departments in your business, and all the different department managers also need your accounting information to which should help their process to go on in a smooth way. So that is why these three things, these three are the examples. I have just taken three examples for internal users. Next, we have external users. Who are external users? So when you have a business, you have investors from outside. So if you want your investors to invest in your business, the investor will check your financial reports, or they might check your accounting information. They will check how much profit you have earned, or whether if I invest in this business, whether I'll get a proper rate of return. So to check this, the investors will need the accounting information. Tax authorities. So obviously, when you start a business, you have to pay a tax. So the tax authorities need accounting information, because they need to know the profit of your business, because based on the profit only the tax will be collected. The tax authorities or creditors. Creditors are no one, the people who give loan to you. For example, let us take a bank. Okay, a bank needs your accounting information because it should know the information, because whether you are able to pay the loan. When you apply for a loan for a bank, it should know your credit worthiness. It should know whether once you take a loan, will you be able to pay the loans. Okay, so that is why creditors, the banks need to know your accounting information. So these people and all are not a part of your organization, but they need to check your accounting information, because if you want any help from them. Okay, so these are the four main aspects under accounting, introduction to accounting. So this is a very important topic. Hope you understand how the accounting process goes on, and why there is a need, and how it happens, and what principles are followed. We learned the brief introduction of how these accounting happens, and what is the starting stage and the last stage of accounting events. So now let us learn the meaning and the objectives of accounting. So before we get into these things, we have two different terms here, which might create a confusion in your mind. That is accountancy and accounting. Okay, so need not to get confused. Accountancy is a subject. The study of accounts is called as accountancy. Accountancy is the subject. Accounting is a process. What process you do that? I mean you just take the transactions, record it in the books, and then analyze things, and then interpret it to the users. This process is called as accounting. So need not to get confused. Accountancy is a study of accounts. Accounting is a process of accounting. Okay. So now let us learn what is accounting. Define. In your examination, they might ask you define accounting or what is accounting. Both are different terms. You just have to give definition and ask define, and you have to just explain the meaning when asked what is accounting. Now let us learn what is accounting. Define accounting. The AICPA, that is American Institute of Certified Public Accountants, define accounting as art of recording. It's an art, because everyone cannot record or take down the transactions, or write down the transaction, or interpret the transaction in the particular way. Okay, every person or every business interprets in a very different way. So that is why it is called as art of recording. Then classifying. Then you classify the transactions into different heads or different categories. Classify it, and later you summarize it into one statement. You summarize it, or you put it into one statement in a significant manner, in a proper manner, and in terms of money. You don't forget, in the beginning also I said the transactions should be in the value of money, terms of money. Transactions and events which are in part at least of financial character. The transactions or event, at least a part of the transaction or event should be financial in character. That is, they should the money should be included in it. Okay, it should be something related to finance. And interpreting the results thereof. So once you all summarize it, you just interpret the result to the users. So this is the definition of accounting. And if they ask you what is accounting also, you can just write accounting is the art of recording, classifying, summarizing in a significant manner, and in terms of money, transactions and events which are in part at least of financial character, and interpreting the results thereof. Okay, this is all about the meaning. Now let us go to objectives. Why do we do accounting? So what is the main aim of accounting? So there are basically 4 aims. That is maintenance of records of business transactions. As I said in the beginning, once you start your business, from the start date till the end date or the end of the year, you will have n number of transactions, and you cannot remember it in just without recording it somewhere. Okay, you need to put it down somewhere. So that is why it is the records which are maintained for entering the transactions or events of a business. So this is the main objective of accounting. The second main aim of accounting is calculation of profit and loss account. As I said in the beginning, every businessman will be curious to know whether his business is running in profit or loss. Okay, only then he can take further decision for his business. So you know basically generally how the profit and loss is calculated. When your revenues are more than expenses, then it is called profit. Okay, but when your expense is more than your revenue, then it is called as loss. This is just general, but the calculation process is a bit lengthy. You learn that in your further chapters. Okay. The third one is depiction of financial position. Okay. So at the end of the year, the business should know its position, whether it is standing in a proper position or what is the actual financial position of a business. Okay. So that financial position is determined in the statement called as balance sheet. So every accounting, in the end, you prepare a statement called as balance sheet. So that balance sheet will tell you the financial position of the business. So practically we'll learn balance sheet, how to prepare balance sheet in your further chapters. Okay. Then providing accounting information to the users. So in the previous chapter also we learned that. So that is also one of the main aim or main objective of accounting is it should provide accounting information to its users, whether it's external users or internal users. So this is all about the objectives. So hope you understood the introduction of the chapter, that is introduction to accounting, and we learned the meaning, then we learned objectives. So in the further class we'll learn whatever the remaining topics under the first chapter, that is accounting, introduction to accounting. Thank you so much for watching the video. I hope you understood the topic. Hope you understood all the concepts what I thought. So even then, if you still have any doubts, please comment in the comment section. And thanks for watching the video. Please like the video and subscribe the channel. Thank you so much.